Good morning, team. It is morning. I know I'm starting a little bit late today. I know I am. Nvidia and other microchip stocks are gapping down significantly here. Let me mute this. But yeah, Nvidia, other microchip stocks are gapping down pretty heavily today. There is some news this morning. Let me put the banners up. Gold, yes. So look, here's Nvidia right here. Again, Nvidia and other microchip stocks are gapping down after concerns that the U.S. may adopt, worse restrictions, a little bit more harsh, a little bit more strict restrictions on Chinese trade and semiconductor technology is what they're looking at. So Nvidia, Intel, and Apple gapped down a little bit before the open today. ASML is down. The current administration is considering using the most severe trade restrictions available if companies like ASML continue to give China access to advanced semiconductor technology, according to Bloomberg. The CEO of St. James Place said, quote, Biden knows 75% of the U.S. electorate is unfavorable towards China overall, so it makes sense for him to talk up tariffs. The other candidate speaking in an interview with Bloomberg also questioned whether the U.S. has a duty to defend Taiwan, a major hub of semiconductor manufacturing. And you wonder how this is going to affect other chip stocks like TSM that are directly, relevant, of course. In an interview with there was also another quote that said, again, quoting here, there's a chance that the market has gotten a little bit too excited about the Fed's ability to cut interest rates in an environment where inflation isn't yet down to target and there are these overhanging fears. This was said by John Taylor, Director of Global Multi-Sector Strategies at Alliance Bernstein. On Bloomberg, on an interview with Bloomberg, he said, quote, you're looking at greater tariffs, which is itself inflationary. So a lot of inflationary fears. We did have some earnings this morning, but yeah, you can see Nvidia gapping down sizably this morning, gapping down after a pretty good day yesterday too. Luckily I locked in most of my profit on Intel. I'm mostly scaled out of it. We were able to make some money on Intel. Our average price is $30.76. $30.76. Intel currently at 34, so we were able to take some of that stuff off. But yeah. SPY also gapping all the way down to 599s. So again, you guys remember yesterday I started scaling out of some stuff, and it looks like it was the right move, to be completely honest. We started scaling out of Home Depot. Intel, we started scaling out of what else did we start scaling out of? I think we started scaling out of Palantir. Yeah. So let me put some music on in the background, chat, and see what this is like. Hey, thank you, Jay. Bearish or bullish for 5 minutes on the S&P 500? I have no idea. I mean, typically my bias here, if we look at everything, here's Tesla down, Nvidia down. If I look at the SPY, the S&P itself is closed, right? So unless you're talking about the futures contract, the E-mini S&P here, I guess I'm bullish personally, just because I think that everything's down a lot already, and so Everything's down a lot already, so I think, yeah, I'm slightly bullish. Although I have no idea. 5 minutes is a really unpredictable time frame. Nobody knows. Over 100 degrees here yesterday, and today I'm, yeah. McDonald's. Yeah, McDonald's has been on a long-term downtrend too, man. It's been downtrending all year. It is at the bottom of a trend too. Why Nvda and Tesla falling? Some report. Yeah, so again, we'll put the news up. So Nvidia, MU, AMD, etc., all gapping, all down in pre-market. Will they bounce? Yeah, interesting. Laggard rotation. We did have some earnings this morning. Specifically, we had, what do we have?
This video.
Sorry, I'm trying.
You're telling me this.
I'm trying to mute TikTok, but I'll have to mute the background noise here. CLLV. I remember CLLV as a company. Yeah, so some companies had earnings. CLLV, terrible company, though. Let's be honest here for a second. Horrible company. All right, so this morning we had Johnson & Johnson report. Johnson & Johnson looks like it reported beats here. Johnson & Johnson posted 282 versus 271, 22.45 billion revenue versus 22.38, so better than expected revenue and EPS. Lower growth at minus 12.1% growth. So we also had ASML report. They posted 432 EPS versus 387, so better than expected numbers for ASML here. Ugh. Dude, these headphones suck. Sorry, I'm going to have to turn my music off and then back on. Yeah, but ASML got pretty big gap down from these results. Can y'all hear the music again now? But yeah, look at ASML. They reported earnings, again, worse than expected here. Here, I gotta stop this, fix this. There we go. Yeah, I definitely don't make these beats. Yeah. Honestly, if I was making these beats, y'all would hear a lot more about them. You know, what's up, Tiny? Good morning. Pre-market opens up at like 3 a.m., 3:30, something like that. CLOV, a horrible company, although it does have a good daily chart. I'll give it that. All right, so NBA 30-year mortgage rate came out at under 7% at 6.87% for mortgages. So interest rates actually decreased a little bit here. Look at this. Any reason why SQ does not rise compared to QQQ fall? Well, I don't really follow SQ that much. number one, it's a smaller price, you know. So like Q is gapping up and SQ is gapping up and Q is gapping down. So yeah, I mean, it just has lesser range, you know. The Q is hundreds of dollars a share. SQ is less than $10 a share, so it's just gonna have a smaller range. The range matches up though. I remember TVIX, UVXY. UVXY is still around, but I remember TVIX. These are just ways to short. All right, guys. So yeah, ASML, Johnson & Johnson, Anthem, Prologis released their quarter one earnings this morning. The Dow and S&P both hit new all-time highs yesterday. Did they? Let me see. Did the Dow? No, they didn't. This is wrong. The Dow and the S&P. Did the SPY break lifetime highs yesterday? It did. Okay. This thing is actually correct. Okay, so yeah, the Dow is the Dow. At first I was like, AI sucks. Maybe I'm not that good. Yeah, so again, the Dow. Look at the Dow break all-time highs yesterday. The Dow marked its best daily performance in over a year. It's driven by strong earnings from key stocks and continued investor optimism on the Dow. So the Dow pumped up yesterday. Wow. Look at the Dow. Consumer spending is still pretty solid in June, according to economic stuff, alleviating concerns about potential economic slowdown. Retail sales figures exceeded expectations. We had some positive reactions. There's a lot of discussion recently on the possibility of a Fed rate cut. Some analysts and economists, including Goldman Sachs, argue that the Fed should act sooner than later to stimulate economic growth, and that's just because they want more business. Again, key movers in the market include United Health, Caterpillar, and Boeing, which have seen significant gains. On the downside, companies like Merck and Microsoft have experienced declines. I like Microsoft as a company as well. Where are they at right now? Let's see. Yeah, Johnson & Johnson came out already. Yeah, Microsoft gapping down. But again, they've been up so much already. It's hard to tell what they're going to do. Yeah, so again, Johnson & Johnson posted 282 EPS versus 271 expected, 22.45 billion versus 22.38 billion. So they beat EPS in revenue for Johnson & Johnson. We had U.S. Bank, Citizens Bank. They did downgrade fiscal year adjusted EPS guidance to 1007 versus 1072. So a big decrease in fiscal year EPS guidance here. So here's Johnson & Johnson. If you look at Johnson & Johnson here, you know, I think one of the things negatively affecting Johnson & Johnson, and one of the reasons I've never been a big fan of this company, right, is so, like, if we look at the longer term chart, I'm just going to try to detail why Johnson & Johnson has been a struggle. You know, Johnson & Johnson essentially has been downtrending since 2022. For years, it's been downtrending. And I think it's justified. And I'm going to explain why I don't like Johnson & Johnson. Is because I think there has been a very obvious change in public perception of this company. You know, I think that a lot of people are going, like, especially for some of their biggest products like baby soap and stuff like that. I think a lot of people over the last few years have stopped buying stuff like this and instead go with like super organic type, super safe, super clean products, and I think Johnson and Johnson, at least over the last few years, has had that negative reputation regarding, how good for you their products actually are. And again, I'm not saying it's true or whether it's not true. I'm not saying Johnson and Johnson is bad for you, but just in terms of public perception over the last 2 to 3 years, I think there's been a big shift in the perception of companies like Johnson and Johnson, in which a lot of people now are looking at it like, is this soap really good for you? And regardless of whether it is or not, they're making noticeable changes in their buying patterns, and instead they're now buying up, a little bit more organic type of soaps and stuff like that. And I think we're seeing that very often now, versus where we used to see it not nearly as much. What do you guys think about Johnson & Johnson? Do you think it's a buy? I mean, it's been downtrending for 2 years. Yep, easy Mike, 100%. Is it down 25%? Let me see. It's down about $40 a share over the last 2 years. $40 a share. Yeah, I mean, it's a little bit under 20% or 25%. 20% would be if 20% would be like if it was $160 in price. And it dropped $40 a share. That would be 25%. It dropped $40 a share. It's about 180. So it's like 22% or something like that. Is what it is. Meta. Yeah. So Meta. Meta's still, put a daily chart up on Meta. You'll see it's very strong. Stocks are not going to go straight up. I don't like them to go straight up. I'm sketched out if they go straight up. Q's starting to break lows again here. So I'm a little hesitant to, I'm still hesitant to buy up a lot of stuff here, to be honest. Meta? You think Meta is in correction territory? Look. This is a weekly chart on Meta. Look at this chart. Look at a daily chart on Meta. It's a pretty strong chart, guys. I mean, listen. I'm not saying, you should buy it or anything. But, Meta, I think the bigger problem with Meta is the double top that we see right now. I think the double top looks weak. But Meta looks like this on the year. This little pullback, I don't think it's anything. I think if we were breaking under 420s, that's a different story, but I think we're still up ridiculous amounts on the year. Look how much this thing's up on the year. That's a crazy amount. Yeah, 10% drop. Maybe it is 10%. I don't know. What is it? 10% would be if we were at 20% would be if we were at 500 and dropped $100 a share down to 400. So 10% would be a $50 drop at 500. Yeah, I mean, we're down $50. It's not quite 10%. It's getting close, I guess. So if we're looking at a 10% as that level, then that's correct. But we're not there yet. We're a little bit under that, So just with my math in my head, it would need to, it's not quite 10% yet. It's probably what, 7-8% right now, but it's getting close. You're right. The market is down again on this news today, chat. Chip stocks, reports on potentially harsher restrictions on Chinese chip makers, Nvda, MU, AMD, all down pre-market. Definitely a red day in markets. I usually like buying up stuff like this, but What are your thoughts on Fiverr? I think Fiverr's a good company, but it's certainly it's probably not going to scale larger than it did, and it's down a lot over the past few years. Fiverr got really big during the pandemic when everybody was home and using them. Just got really extended. Now it's down from $3.36 a share to $25 a share, so it's really, really down. So maybe there's some opportunity cost here for buying it up cheap, but again, I really don't know. I think I like Fiverr as a company. I also think the quality of work that you get on Fiverr is getting worse. I also think that the fees on Fiverr are hurting it. I think Fiverr got too greedy, started charging way too many fees, and started upping their fees, and yeah, I think that causes a lot of people to just go elsewhere and go off of Fiverr. Boeing, yeah, Boeing's bounced back a lot, but it's still been pretty down. Yeah, chips are down today on the news below me. Again, chip stocks are down, potentially harsher restrictions on Chinese chip makers. Current administration's talking about potentially more tariffs on Chinese companies. So we'll see what that looks like. Yeah, so again, earnings are out today. Is it time to buy the dip is the question, right? Like, we pulled back heavy. Here's the SPY. SPY down significantly. The Dow, on the other hand, has popped up big. I might buy this dip on a short-term day trade. So I might buy this dip on a short-term day trade. We'll see. There we go. Yeah, so I might buy this dip. Right when I'm saying it bounces back. Frustrating, man. Ugh. It's like I'm struggling to buy this dip. I wanted to buy it way down here, but it just took me so long to edit it. We already bounced a lot, unfortunately. I'll see if we dip some more. I'll buy 50 shares. But I wanted it down here, about 20 cents lower. Just didn't quite catch it. I'll try to average into a position here if we start dipping down, though. Only 50 shares. I'll take up to 200, 250. But I need to dip a little bit more and average into that first, just because I didn't quite get the entry I wanted. So, small position so far. We'll add to it if we get something good. Hey, thank you. Thank you, Y. I appreciate it, ASMR or ACMR. Thanks for the donation. I don't know anything about this company. What is this? ACM Research. What does it do? ACM Research is a company that specializes in developing and manufacturing cleaning equipment for semiconductor water manufacturing. Their product portfolio includes single wafer wet cleaning equipment used to remove contaminants from wafers during semiconductor fabrication. Well, yeah, so strength in semis is going to be strength for companies like this. I'm sure this is kind of growing alongside semiconductors, yeah. And it has a pretty big pullback, though, so it has a little dip. I just don't know enough about this company. It's kind of a mid-cap stock with a neutral long-term trend. And so it's a really new company as well. So it's kind of like a little bit more of a risk, of course. But it doesn't look bad. It just depends on how strong semiconductors look, how Nvidia looks, all that stuff coming up. Yeah, Netflix earnings coming out soon. But no, I appreciate the donation. Thank you so much, man. Appreciate the $10. Yeah, I'll check this. I'll watch this company moving forward. I just don't know enough about it to really say. It has a neutral sideways trend, like a sideways. It has a sideways trend over since its IPO date. Really, it's still at $25 a share. It had some spikes, but I think I would rather that than like deep extension right now. So maybe this is a undervalued microchip play. I just don't know enough about it to say yes or no. So good luck. I hope you make money on it. Again, we also got the micro E-mini. Now will be good exiting for my short position. I don't know, Jay. And again, I'm not going to tell you what to do there. I can't really tell you to buy or sell anything because I really have no idea what anything's going to do. I'm not an investment professional. I'm not liable if you lose. Not an investment professional. You got to make your own assessment, trade responsibly. Yeah, just be smart, I was gonna add some more to this, but maybe I should have. I'll go ahead and try. Alright, we're in 75 shares. We'll go ahead and take 100. We'll add another 50 if it dips down some for me. I wanted a larger position here. We just didn't quite get it. Alright, we're trying here. Hold or sell Nvidia, I have no idea. Hey, what's up? I'm him. We're gonna try to take half off here. Yeah, there we go. We just locked it in. A small little trade, but if we can make 20 bucks in 5 minutes, I'll take it. I'll maybe add my size right back if it pulls back is what I'm kind of looking at. Yeah, I usually like buying up red at days. Typically, like if we're gapping down super significantly, then usually that's when I like to. That's usually when I like to buy up stuff. But again, I don't know if we're down enough for me to really say. Is the only thing. Like I just don't know if we're down enough for me to say yes or no. What's a scam? Love that train of thought. Make that $20. Honestly, I'll like. My account's larger than most people out here on YouTube. I would imagine. But I'm not opposed to making $20. Honestly, I wanted a lower entry. Like if I would have bought it up down here, like I wanted it. I'd make more. I just didn't catch it, and so I gotta take a small. I gotta accept a small trade. Is the easiest way to put it, And I'm thinking about adding right back, and now I just have a nice little cushion that I can use on the position too. Yeah, tariff talk sunk the whole sector. They're talking about more tariffs for overseas chip makers. That whole thing is tanking the market again. I'll go over this again. We got a couple quotes. I'm looking at Yahoo Finance specifically here. But yeah, tech stocks are down. NASDAQ futures are down over 1% on concerns that the U.S. may bring in more strict restrictions on Chinese trade in semiconductor companies and technologies. Nvidia, Apple, Intel all down today before the open. ASML down 6%, with tech shares also going down overseas in Europe. The current administration is again considering using the most severe trade restrictions available if companies like ASML continue to give overseas, China access to advanced technology, according to Bloomberg News. Again, CEO or CIO of St. James Place, Chief Investment Officer at St. James Place, Justin Onukwusi said, quote, Biden knows that 75% of the U.S. electorate is unfavorable towards Chinese overall. China overall, so it makes sense for him to talk up tariffs. End quote. You know, John Taylor at Alliance Bernstein said in an interview with Bloomberg TV, quote, "There's a chance that the market has gotten a little bit too excited about the Fed's ability to cut interest rates in an environment where inflation isn't yet down and to target, and there are these overhanging fears." And I absolutely agree with this statement here. I do think that the Fed cutting rates is a bad thing if we do it too early. Like, if we cut rates too early, again, please understand, right? Like, somehow lenders and big business have convinced people that cutting rates is somehow a champion for the little guy, like somehow like a celebratory thing for the little guy at home. I'm here to tell you that is not true, right? Cutting interest rates will make inflation worse. It will make prices worse. It will cause more price spikes. It will cause more inflation. If you think you're unhappy now, when inflation spikes up to 10% again, you're really going to be unhappy. And so it is bad for the little guy, in my opinion. It's not something we should do until we're absolutely ready for it. And yeah, we'll see what that is. We'll just sit on this one. All right, catch it back up in the chat. Ready for whatever they've got to reserve in case it drops more. Yeah, ASML is falling specifically because of earnings. You know, they had really bad guidance is why they're down. So yeah, ASML is down because they posted bad guidance for sure. I'm pretty sure this was ASML. Maybe I'm wrong. Let me make sure. But yeah, I'm pretty sure ASML is down because of bad guidance numbers. Let's see. Let me look this up. Yeah, so ASML posted 401 EPS versus 371 estimates. Sales beat expectations as well. But I think their guidance was worse. Wasn't it ASML? Maybe it's a different company I'm thinking of. Either way, they're gapping down significantly here as a chip related stock. You know, I'm looking at some market chatter. ASML could be targeted with the most severe trade restrictions by the U.S. government, and it continues providing China with access to advanced semiconductor tech, according to Bloomberg. Sources said the Biden administration is mulling whether to impose the Foreign Direct Product Rule, or FDPR, against companies such as ASML and Tokyo Electron, according to the report. So yeah, this is the current administration being really strict on chip makers like ASML. It says, quote, "The U.S. is reportedly pressuring Japanese and Dutch officials to tighten their China policies or face the implementation of the FDPR." If you don't know what the FDPR is, it is the Foreign Direct Product Rule. So the Foreign Direct Product Rule. So we'll give you a little bit more detailed explanation. It's a regulation used by the U.S. Department of Commerce to control the export of tech and products that are derived from U.S. tech. This rule allows the U.S. government to extend its jurisdiction to certain foreign-produced items that are a direct product of U.S. technology or software. It applies to foreign-made items that are the direct product of U.S. technology, software, or plant or major components of a plant that were designed or developed from the U.S. technology or software. This rule can control items that are produced outside the U.S. but rely on U.S. technology. It's often used to restrict the sale of high-tech products and technology to countries that pose national security risks or have violated export regulations. So that's the rule they're essentially looking to use to have more restrictions on chip makers overseas. And the overarching point of this is, like, they don't want overseas countries to gain an edge using U.S. technology is what they're using. I mean, I think it's kind of a silly thing. I think a lot of tech is made overseas that we use here, you know, and so we use a lot of their technology here, you know what I mean? Like, I think it's kind of a silly thing, but I do understand at the same time. All right, so we just cut the position here. I didn't mean to take all of it just now, but we'll look to buy back if we get a little dip. Yeah, I made a good bid on Intel, but I've already mostly scaled out of my positions here. So Intel, I'm already mostly scaled out of positions here. Intel's actually up today. That's nice. So we're actually green on Intel. But I've already, again, my average price in Intel's $30.76. Intel almost up to $35. So we got a really nice, you know, we got a really nice like 15% relative to our entry price there. So I'll take that. This is why I talk bullish on Intel long term. If they go bad, it's going to be huge. Yeah, maybe. Why is this market all red this morning? What happened? Yeah, so again, what happened is that chip makers are down after, you know, the current administration is mulling using the FDPR rule, which stands for the Foreign Direct Product Rule. It essentially says that they can place more restrictions on overseas companies if they're found to be using U.S. technology, and they're competitors to us, essentially is what it is. So it's just more restrictive rulings, more tariffs, you know. Yeah, so technically it's not a tariff restriction, but rather an export control measure. Yeah, so tariffs are taxes imposed on importing goods and services. This specifically is a export control regulation. So it's a little bit different than a tariff, but yeah, it's just more restrictions overseas on these companies. Yeah, again, we had the idea to buy it, and we should have, you know, maybe gone a little bit heavier, but we were just too late, a little bit too late. Keep an eye on the 30-minute candle until it closes in 6 minutes. If it gets an influx of buyers before closing, we're going to back up. Yeah, I don't think we should drop prices. Or I don't think we should drop rates, I mean. Yeah, I'm in MU here, so I am in a position on MU, but MU continues to fall. Gapping down significantly on this news. Taiwan Semiconductors, yeah, I'm sure they're kind of doing. They're not doing that hot either. Is this the correction that we're going to start to see? Again, we got earnings season coming up, so is this the big correction we're going to start to see in these stocks? Yeah, I always trade past 8 a.m. Miner stocks. Well, it depends on what you think Bitcoin is going to do. I'm one of those people that if I'm going to buy Bitcoin, I'm going to buy Bitcoin, not necessarily the mining companies behind them, you know, because I mean, they're all kind of moving the same way with Bitcoin, but the miners are so volatile. They go up and down freaking, you know, huge percentages. If you look at a yearly chart for Riot has gone up and down, you know, 50 to 100% in some areas. You know, just to put this into perspective, Riot specifically on the 10th of July, so 7 days ago, a week ago, was at $9 a share. It's now at almost $13 a share. It just goes up and down too big of percentages for me. You know, and really ultimately it depends on how much you like Bitcoin. If you like Bitcoin, you can buy Riot and maybe get some leverage there, like some leverage type of trades there. But I think it's easier just to, with the amount of like leverage and stuff they give you in crypto specifically. I think in that situation it's just easier to buy Bitcoin itself. But you know, Riot's doing okay. Mara, same kind of thing here. If you look at a daily chart, Mara's doing a little bit better than Riot. But again, Mara itself was at $7.16 less than a year ago. It's now at $26. It was at $34 in February. It dropped all the way down to under $15. And so for a company to go up and down 50% plus like regularly throughout the year, it's just too volatile for me. It's too risky. I would rather not play with that and gamble. Oh no, all good, Sass. I don't know. List some companies I can take a look. I'm not really super into precious metal mining companies, but yeah. How about afternoon? The only time I'll ever trade afternoon, and it's not really a trade. It's like if I look at my portfolio and I'm up really big in anything, like if I have some huge gain that happens after the middle of the day, I will log on to Thinkorswim, sell, take profit, and then go back to my day. Outside of that, it's not. I'm never really trading in the evening or in the afternoon session. There's just less edge there, in my opinion. I like Bear too. Yeah. Yeah, I think the problem is everybody wants to trade, but sometimes it's not the right time to trade, if that makes sense, let me do a poll. I don't think I did a poll today. Does the market bounce back after the opening bell? Let me know what you guys think. Does the market bounce back after the opening bell today, chat? Where have you had the most successful swing trades? I mean, it depends, man. Best swing trades are probably earnings plays where a company will drop significantly on earnings, and I buy the dip. If it's a healthy enough company, I'll buy the dip after earnings, after like a big pullback from earnings. I'll buy that dip, ride it back over the following few weeks, and usually we get some pretty big rebounds. So an example of this is I just wait for, let me try to show you guys this system. I'm trying to think of the best stock I use this one. I've done this a couple different times with a lot of different companies. I'm trying to think of the ones I've done it on the most. Was it Meta? I think I did a Meta. Yeah, so here's probably the best example here. So one of the most consistently profitable strategies for me is taking advantage of overreactions in earnings. And so again, one of my most, here, I'll put it up on this screen because it's easier to see. All right, so if we pull up Meta here, let me see if I can go back all the way. I don't think I can. Let me see when their earnings were. So their earnings were on the 24th here. So I don't think I can go back that far. Maybe I can put a 5-minute chart up. Yeah, so okay. Is this it? Yeah. Okay, so I'm trying to make sure this is when. That was the last earnings report, right? Yeah. Yeah, so April 24th. Okay, so one of my favorite strategies, right? Now that I have this pulled up, my favorite strategy to take advantage of in swing trades or just trading in general, it can also work with day trading, is waiting for a healthy company like Meta, Amazon, Apple, whatever you want, to have a really big overreactions to their earnings, right? One of my favorite strategies is just looking for a company like Meta, Apple, Amazon to report earnings. And I'm pretty sure Meta had mixed results. I don't think they were horrible. I think they actually did better than expected in a lot of ways. But again, when you look at Meta dropped from $500 a share basically all the way down to under $400 at one point. That's a pretty major drop in the stock price. It's a pretty big drop in the stock price. And generally speaking, a very high edge strategy is waiting and buying these dips, right? When I buy these dips, the logic that I usually have with this trade is that I'm going to buy some here. And if it bounces back in my favor short term over the coming weeks, great, I'll take some profit. If it doesn't, I can usually sit on it long enough. And if it's a good enough company like Meta, Apple, Amazon, over a long period of time, it's going to bounce back. And so with that bounce back, I can profit from. And if you look at a daily chart here, that's exactly what I did on this meta position. I bought the dip down here, and over the coming weeks, it bounced all the way back, completely filled this gap here. And it's just a really high edge trade. This works very, very well. I do this very, very often, and it's one of my favorite trading setups to use, and it's just really consistent. The big key, again, is that you have to pick blue chip healthy companies. It can't be a company that IPO'd 2 years ago. It can't be a company nobody's ever heard of. It has to be healthy, well-known companies that you can essentially bet long-term strength on. If it's not something that I can bet long-term strength on, I'm not really going to touch it. But if it's a healthy company that everybody's heard of and it drops, 20% on an earnings play that was decent earnings as well, I'm there to buy it up and ride the bounce back. And again, it works really well, but I can't guarantee it's going to work for anybody. Always do your own assessment, test it yourself. All right, let me see if I can clip this. Yeah, I mean, Nvda I think is really extended, but I think the same strategy I think would work well there too. It just depends. You just got to do it right. It's not always going to work. Everything's not going to be perfect, but just in terms of probabilities, those are the plays that work the best. Probability wise, Super micro semiconductors. I like super micro. I think it's up a lot. And I think, one of the risks here is that if microchip stocks correct, this is a low float microchip stock that can really correct. But it's just high risk, high reward, I'll wait for Nvidia to hit 100-day SMA. Maybe. Intel is running. All right, let me save this here. Hold on. All right, there's part one. All right, let me. All right, sorry guys, I'm trying to track. Yeah. Super micro semiconductors is just up a lot. Super micro, the problem with super micro is that it's a low float position. It's a low float stock. And so what that means is that it's going to move up and down in massive percentages. Somebody saying Intel is running? Yeah, Intel is up. I got Intel 40 plus calls on August. Yeah, my average price on Intel is like $30.70. So it's almost up to $35. All right. All right. All right, I can put the music back on now. Clip this. PE is not bad on Supermicro Semiconductors. Sure, it's not bad, but it's also a new company, right? So it's a new company that's not super old in terms of like it.
Yeah, I mean,
IPO'd a long
Nvda I
time
think is
ago.
really extended, but I think
Sorry,
it,
here. Let me. It IPO'd a long time ago, but it really didn't take off until the last like 2 years, right? So the amount of time it's been earning high amounts like this is too young of a company in that way, right? For me personally, it's too young of a company in that way. Even though it's IPO'd a long time ago, like this company's been around since 07, it's still too new. The float is too small for me, to be honest. Because again, what could ultimately happen with Supermicro is this. All right, so this is up a lot on the Microchip AI boom. The problem is that it's a low flow company. So the problem is that if it does correct, as opposed to like Nvda, right? If we put this next to Nvda here, and Intel's still running, but if we put this next to Nvda on a weekly chart, you can see Nvidia's up a lot, Supermicro Semiconductors is up a lot. If Nvidia goes like this, right, Supermicro Semiconductors is gonna go like this. You know, it's just too big of risk. The float is too small. There's too much volatility that can happen there, and there's just a lot of risk. A lot of risk in that way. For me, at least, there's just a lot of risk. I think I have to ultimately be careful not to take gambling trades. Is the easiest way to put it. It's just a gamble trade. I'm not saying it's not going to work out if you're holding it, but if I'm going to bet on microchips, I'm not going to bet on Supermicro Semiconductors. I'm going to bet on healthy legacy companies that have been around a long time. Nvidia, AMD, MU, Intel. Like, I'm going to diversify it, like Microsoft, you know, Google. I'm going to diversify into those companies as opposed to a super low float chip company like Supermicro Semiconductors. The risk for me, at least, is just way too high. But again, it depends on the person. Some people are going to be more comfortable with that risk. I'm not one of them, you know. And so I hope you guys make money on it. It's just not for me. Supermicro is probably as old as Nvidia, though. It's not. Supermicro IPO'd in 07. Nvidia, you know, 10 years ago, people have heard about Nvidia company, right? Nvidia IPO'd in 1999. So Nvidia is definitely older. 10 years ago, if you ask somebody who Nvidia is, they're going to tell you. 10 years ago, if you ask somebody who Supermicro Semiconductor is, they're going to say they've never heard of it, right? That's the innate issue with it. You feel the same way about ARM? I mean, I made a lot of money on ARM, and I like ARM as a company, but again, if I want to buy semiconductors long term, I think it's high risk, high reward. I rode ARM. I bought ARM at like 36.50 or something crazy, and I rode ARM all the way up to $100+ a share. And ARM has been doing great, but again, in terms of just extension on the upside, it's just not at a place where I feel comfortable buying it. Same reason for Supermicro Semiconductors, and that's all right. Like, we don't have to agree on every stock. You know, nobody's gonna agree on every stock. Like, we can only, you know, like, y'all might like ARM. I like ARM as well as a company. It's just a little bit too risky for me right now. If it pulls back some, I might buy it. You know, Supermicro Semiconductor is one of those companies where I'm not really going to invest in it regardless, just because of the low float added volatility that comes with it. And it's high risk, high reward. That, you know, the people that do make money on it, if it does go up, are going to get, you know, some really nice, you know, gains from this company. The risk is just too high, though, because this company might drop 50%. And so if I buy, you know, just pulling up Supermicro Semiconductors, if I buy, you know, this thing's at $900 a share, basically $876 a share. So if I buy 100 shares, you know, and this company drops 50%, I'm down $44,000. Like, I'm good on that. I don't want to take that risk, you know. And people are gonna say, oh, well, buy less shares. Sure. So you buy 20 shares, right? That's $17,000. You lose 50%, you're down almost 10 grand. It's just a lot. That's just a lot. You know, even if you take small share size, the risk is high. And again, because the float is small, the same can be said on the other side too. If you buy 100 shares, you might make $44,000. You know, so you might make gains on the upside. But again, for me, microchips are very high right now. I believe in them long term. I believe in AI long term. But microchip stocks are kind of up a lot, you know. I don't know if right now is necessarily the time to buy it. You can see Intel starting to run right now. And the reason Intel is running is because Intel is starting to run right now because, you know, it's a national company here, right? Yeah. It's headquartered in the U.S. as opposed to overseas, where they're going to be more vulnerable to tariffs, the FDPR regulations, stuff like that. Like, that's why Intel's running, I'm guessing. Correct? Y'all can correct me if I'm wrong, chat, but I'm assuming that's why Intel's running, is because it's more localized here in the United States as opposed to overseas, which are getting hit with, you know, a lot of negative press, a lot of speculation that the current administration is going to use the FDPR, which is the Foreign Direct Product Rule, which is an export control regulation that restricts the export of certain foreign produced goods that are derived from U.S. technology or software to specific countries, and these are individuals that are considered to pose a risk to U.S. national security or foreign policy interests. So basically, they're going to restrict chip makers overseas. Yeah, I'm pretty sure that's what's going on with Intel, right? ARM went public, went private, back to public. I don't like them. Yeah, I made a good bit on their IPO, but you know, I mean, again, if I got in at $35 a share, and ARM pushes up to over 100, I'm taking profit. You know, like, especially if it was like Walmart or Amazon or Apple or like a really well-known legacy company, sure, I might hold some. But ARM, I took profit on ARM a long time ago. Again, it was just up so much short term from its IPO. I've lost on so many IPO buys that, like, when I finally made money on one, you know, I had to at least celebrate. Alright, so the Q's bounced all the way up to the VWAP, the volume weighted average price. I'm going to take a small little short position. See if we get a little correction. We're running into the VWAP and some resistance levels here. Maybe we'll add some more. Nvidia's starting to push up over the 200 EMA. Yeah, we have building permits dropping in 11 minutes, but it's not really it's not going to influence the market almost at all. So we do have building permits dropping today, but again, it's not really any big influence over markets. All right, we're in 75 shares. I might add up to like 100, 150 shares of the Q. Why would someone wait until normal hours to trade when there's pre-market liquidity and volume? So we do have, yeah, I mean, we do have microchip, or no, we do have building permits today, but it's not really anything like big or like super relevant, to be honest. Yesterday we had a retail sales. Today we've got some FOMC members speaking. We got housing starts and building permits, but again, all of this stuff is pretty insignificant. It's just not any major mover. Intel's still riding up. All right, we just got 100 shares here. Intel, guys, look at Intel. Wow. And we're in Intel too, so it's nice. I mean, it's good for us, but so we're up a little bit. We got 100 shares of the queue. I will take profit quickly here and just kind of scalp some small little gains. And we're going to get ready to day trade. It appears that I'm struggling to trade other instruments like Apple or others, like I see you trade. Yeah, I mean, you're not going to be able to trade like me always. Nobody, I mean, everybody's different, you know. We got a piece of this off. Took another little piece. We got 50 shares. We could just sit on the cushion, see if we come back down more. A little cushion at least. I mean, I'll take it. We're just kind of slowly building up profit. Aeon stock? What is Aeon? I mean, it's a penny stock, bro. Like, again, you don't want to fall into the trap of trying to trade penny stocks. Like, again, most of that market is nonsense, in all honesty. So, I mean, yeah, Aeon is a penny stock. I'm just not really messing with a terrible long-term trend, almost certain to fail. Just not really anything that I'm interested in, brother. Not really my style of trades. Yeah, so what's GameStop doing? I know GameStop is up a little bit today. But it's actually gapping down on the day now. Oof, dude, I got Americana'd yesterday, dude, and I tapped a little bit too late. Oof. Oof, dude, my arm is pain. I'm not going to be able to go to jiu-jitsu today. So give some kind of suggestion. I mean, what kind of stock I'll invest if I don't have enough money. Yeah, I mean, again, I'm not going to tell you what to buy. I'm not really. If you're going to invest, personally, if it was me, I would buy blue chip healthy companies. Like, I would buy, like, well-known legacy blue chip companies. Those are the ones that you're going to make the most money on, most likely, long-term. If you get stuck in the trap of buying penny stocks, you know, you're probably just going to lose money, especially investing in penny stocks. Almost all penny stocks are terrible companies. New traders get talked into it because you got a bunch of young people promoting them like they're somehow like a get-rich-quick scheme. Most of it is a nonsense market. Like, most of them are just terrible companies that you're never going to make a penny from. So you just got to be smart and just kind of avoid them. Like, big money, one of the biggest things that is true in trading and investing is follow big money. One thing that big money does not do is invest in terrible penny stock companies. They just don't touch them. Yes, Raj, I am trading because the market opens at 3:30 in the morning here in the U.S., not at 9:30 for pre-market session. You know, I don't have to wait until actual market hours to trade. I'm trading pre-market, which is, you know, everything's open right now. Look, Intel's shooting up in pre-market. Nvidia's moving down. You know, like the Q is, you know, we're shorting the Q. Yeah, we're trading pre-market. You know, research what pre-market is, brother, before spamming the chat, sir. Look at Intel, though. Intel's shooting up. Interesting. Yeah, we're in 50 shares here. I don't know how I feel. Charge Point? CHPT? Again, yeah, another one of those companies that's just not very good. You know, again, I think the biggest mistake is that traders try to buy mid-cap stocks and invest in mid-cap stocks like they're Apple, Amazon, Walmart, and they're not. These are terrible companies that are almost all going to fail. Like, you might have some companies, like, you might have some diamonds in the rough in mid-caps that succeed and turn into blue chips, but a lot of them are not going to. And so if you try to diversify into mid-cap stocks, you're probably just going to lose a bunch of money as opposed to make a bunch of money. You know, most mid-caps are going to fail, I would argue, as well. And so you have to understand, like, the companies you invest in long-term and diversify into are blue chip legacy companies like Apple, Amazon, Walmart, Target, Disney, freaking, you know, Ford, you know, companies like that that you've heard of, that you've used before, that you know, that are going to be around in 5 or 10 years. The companies that you do not diversify into like that are mid-cap companies like ChargePoint or, you know, whatever. Beyond Meat, Peloton. Those are not the companies you buy like that, because again, those companies are bound to fail. You know, I think traders talk themselves out of buying healthy companies by arguing that they're somehow extended. And again, sometimes they might be, but long term it doesn't matter. You know, and that's the lens you have to look at it under. Intel started to dip finally here, starting to dip a little bit. Again, I'm in MU also here. I might take a little bit off of Intel again up on this big rip. I'm just gonna take a little piece off of Intel, actually. Just a little piece. But yeah, look, I'm in MU. I'm wondering whether I should buy some more of MU here, whether I should add to it. I don't know yet. It's dipping down some. I'll add a little bit to it, just a little bit. Fix my average sum here. I'm still shorting this. I don't know whether I want to add to this short position. I guess I'll try. I'll take 100 shares. Yeah, so in about a minute we have housing starts and building permits, which again, just not the most important report. We'll cover it, but it's just not a big report that you want to pay attention to. Unless you're in specifically real estate. The mortgage rate did show up a little bit better than expected, though. So the mortgage rate did show up a little bit better. Here, I gotta mute the background music. I want to check something real quick. Trying to see what I've done a short on before. I don't think I've done a short on this before. Yeah. Yeah. I don't think I've done a short on this. Good. Okay, cool. Yeah. All right. Oh man, I'm looking up. I'm down on my position, guys. I am actually losing on my position. Okay, cool. There we go. Bro, what I do when market open, there is section in trading view. It show more gainer stock, so I trade that stock for intraday. What you think? It's good or question mark? I mean, I don't know what you're trying to say, bro. I don't know what you should do, brother. No idea. Will Lockheed Martin breakout? I don't know enough about Lockheed Martin as a company to really say either. All I can do is look at a technical trend, and it's kind of flat on the year, so I really don't know there. Weekly chart looks good, though. Like, Lockheed Martin has a good long-term trend. If you look at LMT, you know, it's got a pretty good long-term trend here. Building permit housing start data did drop, I'm pretty sure. We could look at this, but again, it's building permits came in higher than expected at 1.446 versus 1.395 million. Housing starts showed up higher than expected as well. Building permits and housing starts showed up higher than expected. So, trying to day trade only the top runners of the day. Yeah, I mean, you can do that. Again, like trying to day trade penny stocks is kind of a losing endeavor in my opinion, you know. But again, maybe I'm wrong and maybe I'm just not good at it. I don't know. Yeah, I bought Nike after the dip. Yeah, so I bought some Nike. So I did buy some Nike. But again, I'm also kind of like with Nike, I don't know how I feel about it. It's kind of, I think the sneaker market is losing a lot of steam. And I think it needs to. I think the sneaker market was wildly inflated. Like sneakers selling for $2,000, $3,000, $4,000. It's just a really bubble-like market, in my opinion. I don't really understand the sneaker market, but I think, you know, a lot of people are into it, and so, you know, it's got some longevity, but it's just correcting a little bit. And if that's true, you know, I think Nike's a good little dip buy, but I might be wrong. Who knows what Nike does? Again, I genuinely don't know what it's going to do. Not an investment professional. Don't copy me, but I did buy the Nike dip. I did buy some shares of the Nike, you know, on the Nike dip. We'll see what happens. Yeah, Beyond Meat's horrible. Yeah, again, I have mixed feelings about it too, to be honest, regarding Nike. Like, I don't know what it's going to do, you know? Like, Nike, the daily chart looks good. The weekly chart looks good. Like, in terms of extension, but an overall healthy company, it's Nike, right? Nike's going to be around. It's still the #1 apparel, like, sports brand, you know, over everything else. It's definitely the #1 apparel sports brand. But it's also a fashion company, and I think there's risks in fashion companies. I've said this many times before. The problem with buying fashion companies is that, you know, trends change, generations change. You know, kids nowadays, like, new generations don't want to wear what their parents wore, at least most of the time. I think this recent generation, again, is different, because this recent generation, like, again, my daughter's generation, she's 15, kind of dresses like I did in the 90s. You know, in the early 2000s, like baggy Jinko jeans with holes in them, you know, same hairstyles, you know, mullets are back in style. I didn't have a mullet personally, but, you know, earrings are the same, kind of that alternative look, you know, very similar to what a lot of kids in the 90s wore. But I think in general, it's just unpredictable. And I think investing in a fashion brand is a risk. But if Nike's down so much that I still bought it. So, you know, we'll see what happens. New Balance up 25%. Shohei Ohtani. Yeah. All right, we're going to try to take a risk here and add double size in the queue. 200 shares. Short. See if we get just a little bit of a rejection that we can ride down 200 shares short of the queue. Yeah, you don't have to like a company to invest in it. The biggest argument I think is like Lululemon, right? Like Lululemon got really big as a fashion retailer during the pandemic when everybody was stuck at home and wearing sweatpants and all this stuff, right? And so that influenced a lot of the fashion nowadays as well with like Lululemon. Everybody wanted that kind of leisure wear, from home fashion. Here we go. So again, the risk paid off here. We just took most of this off. We'll hold back to our original 50 share position. I'm gonna take a little bit more off, lock it in. But yeah, again, leisure wear kind of got really big after the pandemic. Lululemon and companies like it got really extended on the upside, just really, really extended on the upside. Over $500 a share. And it's not a shock to see Lululemon lose almost 50% of its value. Why? Because fashions and trends change. Again, I have a wife and a daughter. They love Lululemon. But fashions and trends change. It's not something that is reliable to invest in long term. I've been like a broken record about this. Before Lululemon dropped 50%, I was like a broken record about this. And again, I was correct. Here, I'm gonna go ahead and get out the rest and just, take the gains. But again, people have to think critically of like it's, investing takes a very specific type of thinking where you have to think about not just what you like about a specific company, but also the vulnerabilities of a company long term. You have to think about, hey, is this company going to be around in 5 or 10 years? You have to do a lot of kind of thought experiments in that way. And if you do that with Lululemon, anybody looking at it objectively understands there's risks. Like buying up a fashion brand at the height of its hype, is the probably not a good idea. It's kind of like buying up American Eagle in the early 2000s. Like buying up Abercrombie and Fitch. Maybe Abercrombie and Fitch probably not the best example, but it's kind of like buying up something like that at the height of its popularity, right? Like the obvious risks are it's going to lose popularity, it's going to lose interest over time. People are not going to care about it in 10 years. Generations change and they want to wear something different than their parents, right? They don't want to wear their parents' brands like Lululemon. They're going to want something different, right? This is very consistent. And so buying up Lululemon is obviously risky, and it's dropped almost 50%. Plus, you buy a freaking hat at Lululemon, it's like freaking $100. Crazy prices, to be honest. The only ones that I would say are a little bit more stable are companies like Nike, where Nike's been around a long time. It's been around for 100 years basically, and so maybe not 100 years. It's been around a long time. It's been around half a century, and so it's a little bit more stable. It also has a big culture behind it. Sneaker culture is huge. A lot of people love wearing sneakers. And get really behind that culture. And while that's seeing a noticeable decline recently, there's sometimes some extension you can play with. But again, there's risks as well there. I don't buy that, bro. Do you know how many girls wear Converse still and how many guys wear Vans? You mean WEAR is how you spell wear. Where you're using a locational, but anyways, just kind of a OCD thing of mine. But anyways, it's all good, brother. Back to the point though. The point is there's a big difference between Converse and Vans and Lululemon. What's the main difference? Lululemon is a relatively new company in that regard. Converse, Vans have been around for decades and decades. Lululemon, nobody had really heard of them before the last 5 years. Nobody had really heard of Lululemon 5 years plus behind us. And so again, the problem there is that it's one thing if you bet on legacy companies like Vans, Converse, Nike, so forth and so on. It's a completely different thing to bet on new fashion, which is Lululemon. You know, there's a lot of good examples of this, right? But it's a completely different thing to bet on new fashion. New fashion comes and goes very, very quickly. Legacy brands have a little bit more stability, and Lululemon is certainly not a legacy brand. They haven't been around long enough. They've only really gotten popular after the pandemic when everybody was wearing sweatpants and leisure wear, right? So it's a different thing. It's not the same thing. There's a reason it dropped 50% essentially over the last couple, months. It's because Lululemon is a new company, a relatively new brand. It's not Vans. It's not Converse. It's new. And that's much more risk versus investing in something that's been around for decades, I can get a hold of real stoner clothing. Yeah. Classic fashion. Yeah, legacy fashion, whatever you want to call it. Yeah, different market for sure, Derek. And again, we can agree to disagree. I just think I think that anybody looking at it objectively understands there's risks investing in Lululemon long term, because Lululemon's still too new of a company to bet on the longevity of fashion in that way. It's just not the same thing. But again, invest in what you want, brother. It's all good. Like, do what you want to do. I can't judge. Maybe you're right. Maybe Lululemon thrives long term. I don't know. I'm not saying it doesn't. I just think the risks are too high for me to want to buy it up. And really, to be fair, I've been saying this for years. Before it dropped 50%, I was saying the same thing when it was breaking highs, right? Because I felt the same. It's too risky, and I turned out to be correct in that way where it dropped 50%. But I was saying it when it was breaking highs. TSM is the other question mark for today, especially with all the stuff going on right now. All right. These internet people are so weird, man. I swear. I mean, RJ, brother, you seem a little toxic, dude. Like, let's see. You've hit all the archetypes where you're bragging about how much money you make at trading. Like you're arguing and getting weird. Like, it's all good here, brother. Just don't be toxic, dude. It's okay. We can have these conversations, and if I disagree with you, or even if I correct you, I'm trying to help you by correcting the word where, because it was throwing me off reading it. But again, like I said, it's all love here. It's all good. Oh, well, maybe I missed that. It's all good. Anything that can close that green today is a buy. Yeah, I think I should have stayed in my short at the Q. I would have made more money too. And to be fair, honestly, I built this indicator, right? I programmed this indicator on TOS, right? Like, look at this indicator. So I programmed this indicator on TOS, and I've been using it in my trading some. And look at this indicator I built, man. Honestly, I'll take it. Like, look, it gave me this indicator here, where it had the bear signal. You see the bear signal that show up on the Q. That's kind of what we wrote down. Yeah, it's all good, RJ. Listen, it's all good, bro. Like I said, you can stick around. As long as you're not toxic, it's all good, dude. Yeah, I mean, your original response where you said you didn't think it was a good take was pretty respectful, so I'll give you that. So it's all good, brother. If chips fall, AMD bottom seems around 6. Yeah. How much further down can Nvidia go? I think Nvidia could drop more. Again, I've talked about this before. I think if the market does see a correction, right, it's going to see a correction in microchip stocks first. If Nvidia drops down to, let's say, like $100 a share, that's going to tank the market. I'm not saying it's going to, but it could certainly drop that low. If we look at a long-term chart on Nvidia here, right, if we look at a long-term chart on Nvidia, pulling back down to 100 wouldn't be a crazy pullback when you consider the gains that it's made on the year. So like $100 pullback, maybe we see something like that. I don't know. I really don't know. I don't know what we get, but I think Nvidia, I don't know how far Nvidia could pull back. It could pull back more than that, really. Intel's been running up. I took a little bit of profit on it this morning too. I'm already mostly out of the position though. Yeah, AMD is another risk too. I'm hesitant to buy in super heavy for these chip stocks though. Yeah, see, these headphones are off. Yeah, something weird about these headphones is like I might have to buy a new pair. These headphones specifically, I think I've spilled too much coffee on them. I've dropped these headphones straight in a whole cup of coffee, and they stayed in the cup of coffee for like an hour while we were inside, and then I had to fish them out of the cup of coffee, and they still worked after they dried off. But maybe that's the problem with these. What about Dell with their Nvidia cooperation for AI? Yeah, I mean, I like Dell as a company too. I'm sitting here waiting for earnings season. Yeah. Earnings season's coming soon. It's a little bit slower now, waiting for earnings season to start, but earnings season coming soon. All right, so yeah, we're going to tell a story here, guys. We're going to tell a story. Here, let me make sure this is low. So we're going to tell the story of Netscape and Microsoft. A very similar thing happened with Netflix and who was it? It was Netflix and Blockbuster. A very similar thing happened. But the story of Netscape and Blockbuster, the story of Netscape and Microsoft is a really interesting story. Okay, so back in the day, in the 90s, browser companies were a thing. And prior to Netscape, which was a browser company, they basically sold a browser in a box where you would install it on your computer. It was a browser, so it showed you all these different places to go online, and they would sell this, product in stores. And they thrived. They were one of the first companies to IPO really before a set amount of profits. It might have been before any profits at all. Prior to Netscape, companies would have to have a certain amount of profits before they were allowed to really IPO, or before the standard allowed them to IPO at least. But Netscape IPO'd pre-profits and made billions of dollars in an IPO, essentially changing the entire landscape of IPOs, past that point. IPOs had changed from, now they started IPOing companies much earlier in their profit life. Anyways, so Microsoft wanted to do a deal with Netscape. So Microsoft essentially approached Netscape and said, hey, let's partner up together. We'll create a browser. We'll all make money. It will be a great thing. And Netscape basically said, screw you, Microsoft. I'm not working with you. We're not sharing our profits with you. Why in the world would we ever share our profits with you? Why would we partner with you when we already have this really good thing going on? And it was a terrible, terrible mistake for Netscape. What Microsoft then did in return, in a beautiful strategy, is that they started offering their Internet Explorer browser completely free with Microsoft operating system. So anybody that bought a Microsoft computer got the Internet Explorer browser completely free. Within a few years, Netscape had gone from billions of dollars in valuation to only a couple million, and eventually they were sold, I think, to America Online. They might have been sold to somebody else, but eventually they were sold for much, much less than they were worth just a few years prior to that. And so the lesson is, if Microsoft wants to do a deal with you, you might want to do it. And that's the story of Microsoft and Netscape. I've said the story before. It's a great story. But yeah, if Microsoft wants to do a deal with you, you better do it. All right, let me see if I can. Yeah. Yeah, Bill Gates was ruthless, bro. He was ruthless. He really was. Yeah, so here I gotta switch my headphones out again, dude. Honestly, these headphones are weird. I gotta make sure it doesn't sound like that when I'm speaking here. Might be time for me to swap out my headphones. Actually, I'm tired of doing this. I'm just gonna swap out my headphones today and wear my old Bose. Yeah, again, AOL was big, back in the day. So anyways, hold on, let me see. And they thrived. They were one of the first. AOL had to have a game mode like. So you're saying make a deal with the devil? I'm not saying do anything. What I'm saying is make the right business decisions. Because if you make the wrong one, it might cost you. That's all I'm saying. Yeah. And Netscape, again, changed the entire landscape of IPOs. They completely changed it. Yeah. Was there any news that was released last night? Yeah, so. Hold on. Let me finish this, and then I got you. Hold on. Sorry here. Alright. Yeah, so hold on. Let me build this short. Yeah, Q came all the way back down. SPY's still pretty red. Microsoft is having a little dip too. If Jamal Bose, yeah, these Bose headphones have been around for a long time. All right. Oh, did I miss? Hold on, I gotta go find my old clips here. Let me find them. Why partner up? Just sell it outright and walk away and enjoy your life. 100%. I think that's the best move, right? That's what a lot of people like build their businesses around now, anyways. It's just kind of, hey, where can I see my old clips? Where can I see my old clips? Yeah, I'll have to go find it. Where could I? There we go. We got the music about LGV. And let me get this ready here too. Yeah, y'all do me a favor. Hit the subscribe button if you haven't already, chat. We appreciate it. Let's grow the sub amounts. I know there's a way I can find my old clips. Chat, you might be able to help me out here. Yeah, so GameStop, I know GameStop is up. Let's see if GameStop gets on another run here, chat. That's the big thing, is whether GameStop can Alright, let me adjust this. We got pre-market news. Let me just exit out of this. Alright. YouTube. Yeah, I have to look this up, to be honest. On your clips library page, video creators can manage clips made from their videos. Just, okay, so I have to go to my library page. Let me see. Let me go back. There's got to be a library page. There's clips. Content. It'll be on content, I'm assuming, right? Posts. Playlists. Podcast. Promotions. Posts. Live. Shorts. Videos. Yeah, I don't see it anywhere, man. Clips? Weird. Okay. Do I have to go to my phone? Under your video tab, there's an option to choose the oldest. Yeah, I don't see it anywhere. Oh well, it's all good. I'll have to find it later. There's some way to do it. I just don't remember how. Oh, view your channel? No, those are. I mean, I can look at shorts in the same way, but it's different than looking at clips itself. So I can look at shorts, but shorts are different. Right, so it's a different thing. I feel like Q will recover in the course of the day, so I wouldn't buy the SQ. Yeah, I mean, the Q is dropping down still significantly. I still think that we might get a bounce here. Yeah, I mean, it's all good. I can clip this pretty easily, too. It's hard for there's got to be another way to find it. I'll have to... Under the Your Clips library page. Okay, gotcha. Okay, I got it. Okay, I got it. Thank you. The question is, can everybody else see the clips I have? Okay, cool. Thank you, Pawn. I figured it out. Anyways, look at Microsoft down, SPY down, Q down. Is it time to buy the dip? I guess I'm going to here. We're already up in the Q. All right, we just got filled 25 shares. A little baby trade. Okay, there we go. All right, guys. So we're gonna be day trading futures at the opening bell. All right, so here we adjusted it. So we're up a little bit in the queue, buying the dip. I'm gonna start day trading futures here as well. Let me pull up Quant Tower. Unless you plan on a dead cat bounce, I wouldn't do calls for the SPY or Q, at least in the short term. Yeah, I'm just looking at a small little bounce play on the Q. It's very small. This is a 25 share position. I could add to it. It's a little bit longer term. Kind of like a longer term, kind of like a shorter term swing trade almost, if that makes sense, right? Like that's essentially what I'm trying to do, is like a shorter term swing trade. So let me get this up. Again, we've already made some money here in this funded account. I think did we make or lose money yesterday? Okay, did we make or lose money yesterday? I guess we lost money yesterday. Okay, we lost 120 bucks. Okay, so it wasn't that bad. Yeah, I vaguely remember that. All right, so again, here's the Nasdaq. We're in a downward trend. See, just my little 25 share position here. I should have maybe added some more to this, but it's all good. We'll come back to this. I'll probably, like, the problem is we're in a downward trend too, but I think the Nasdaq is so extended on the downside after all this bearish action that we'll be all right. We could have held that position here. Part of me wants to short. I guess I'm going to try to short it. All right, we're going to short the Q, or the NASDAQ futures contract. We'll see if we can build up some profit on the day. We'll add a little bit more to this. 2 contracts here. There we go. We're up a little bit. We're in a downward trend, but sometimes the market's not as predictable as that. So this is a funded account that we're not up very much on, so we could probably take some big swings on this one today and try to like build up larger profit. We have another funded account where we're basically ready. There we go. We started to flush down. We could have taken profit, but I just don't think it was the time. We'll have to wait. Gotcha. Okay, so I look the other way and I'm down. I'll give it 1 second and then cover it if it continues to head up against me. The Q's bouncing back a lot, so my idea of longing the Q would have worked. But I also don't trust this, so I'm just going to get out with a small loss of under 200 bucks there and come back to it. We're about flat on this account now. Still pushing up some. We're going to trade a little bit larger at the opening bell with this one. You came back home after vacation. Yeah, I think we got choppiness. I'm going to wait until the open. I think we'll get some good volatility today, though. Based off of just the big bearish action that we got prior. You know, I think we'll get some good volatility, hopefully at least. Your first name doesn't match what you entered in your direct deposit first name. So let me check my direct deposit information. Sorry, I'm trying to process a payout with Apex here. And again, if you want to check out Apex chat, you know, I'll put this link up here. You can check it out. Look. So if you want to check out Apex, I'll put the link up. Great way to help support the channel here. Apex gives you a demo. They test your skill with a demo account. If you pass the test, they fund you. If you fail, you only lose what you pay for. The base one on Apex is only $35. With that, you can get either $25K in funding. If you get a $25K demo account, if you hit past the test, you make $1,500 in profit without losing $1,500 first. They fund you $25K with a 90% split. If you lose, you only lose $35. So it's the best of both worlds. Limited risk. If you lose, you're out less than $40 a month. If you pass it, you get $25K in funding, $150K in funding, $250K, $300K in funding with a 90% split, and they've paid out over $200 million to their traders. They fund thousands of traders every single year. They pay out millions of dollars every single month to their traders. And if you use my coupon code again, you'll get it for $35, less than $40 for those three. I'm trying to put like process a withdrawal right now. I think my LLC name is the one stopping me from doing it though. Let me see. Payout method. Yeah, I think I'm gonna have to change my stuff. Alright guys, so we're pulling back. So I see my payout methods here. Yeah, so your name must be identical. Yeah, that's what it is. It's my LLC is stopping it, so I'll have to figure it out. It's the only reason I haven't been able to like I have enough money to withdraw and profit, but my LLC is stopping me from doing it. I'll have to switch it. See, I think my short would have worked here too. Alright, so we do have a bounce back up. I guess I'm going to try shorting this again. And I can take more risks on this funded account as well. You covered data today. There's not really any data. There we go. All right, so we're going to cut this. Beautiful breakdown here. There we go. All right, so we're out. So we just made all our money back plus some. We're now technically green on the day. I don't know what just caused this drop. Maybe it was nothing. But we did get a big breakdown short here. And that worked really, really well. Very quick short breakdown. Yeah, so we are breaking down some. There's news. What news was there? There was news at 15? Let me see. No, all we had was... we had industrial production numbers come out that I was able to profit from, and capacity utilization numbers. That's what this was industrial production numbers. Okay, that's what it was. All right, so yeah, industrial production numbers came in at, let's see what they actually showed up as. Let me look at, yeah, so industrial production numbers showed up at a positive number. Industrial production month over month showed up at 0.6 versus 0.3%. Capacity utilization came in at 78.8 versus 78.5%. We also have Waller speaking in 18 minutes today as well. Nothing else really going on. Do y'all think I should do a separate stream for day trading? Yeah, sorry. I'm kind of playing in the background. Y'all think I should do a separate stream for day trading? I think that makes more sense, where I kind of route to a day trading stream afterwards. Because one thing I noticed about my channel is that, like, early pre-market, we get a bunch of views. You know, if we got data coming out at 8:30, we'll have thousands of people here. And then it kind of slows down afterwards. And because I've been streaming for so long at that point in time, I think it negatively impacts the algorithm as we get closer to the opening bell. You know, I think that makes the most sense, right? Where we transition to pre-market news, kind of like a pre-market prep show, and then we transition to day trading, like metadata day trading stream. I think that makes the most sense. We'll try that tomorrow. Although tomorrow we got jobless claims, but we might still try it tomorrow. We could focus on day trading, and maybe like instead we would just put like a big chart up like this and just kind of focus on that. We'd also focus on like stock market stuff too, but I think that might help. I think that's the plan moving forward. Yeah, so Fed Waller speaking in at 9:35 market time, so he speaks in 15 minutes. I don't know if he's going to say anything good. Just be careful, because he does speak after the opening bell, and that might cause some volatility here. Yeah, no, for sure. I'd have to, yeah. And again, we just kind of dedicate it towards mostly day trading. Have a lot different on screen. Maybe I could switch to like OBS, you know. And I could always redirect my viewers to it, so like everybody would stick around, hopefully. But it would kind of give us a little bit more boost in the algorithm, I think, is the goal. What time do you think I should make that switch, chat? Yeah, 9:15 is when capacity utilization and industrial production numbers. Industrial production numbers came in at 0.6%. And that way, with the day trading stream, I would also keep streaming. Like, I know I've been closing it down like 10 minutes after the open. With the day trading stream, I would also at least stick around for 30 to 45 minutes after the opening bell, so I really get that type of thing too, because I've been trying to build up profits. I've gotten pretty decent at day trading, I think, and I'd like to try to like make a run at building up profits there too. I do it pretty regularly. Switch at the open exactly, nah. At the open exactly would be too much. Like, I wouldn't be able to cover the opening bell because everybody would be switching over. So I think it's probably going to be better to do it at like, my idea is either 10 minutes before, like at like 8:50 market time, like 30, 45 minutes before the open, or 9:10 market time, so 10 minutes after 9, so 20 minutes before the opening bell. That's the two time frames I'm considering. What do you guys think? ASML is down a lot, yeah, and really the market's kind of flat right now. Like, it's kind of choppy. There's not a lot going on. Earlier the better. 20 minutes before the opening bell. Yeah, I think that sounds like a good move at like 9:10 market time. Yeah, well, we'll consider it tomorrow. We'll start planning that tomorrow. Tomorrow we have jobless claims, Philly Fed index. We got the leading economic indicators coming out at 10 a.m. We got some Fed speakers. And next week's super busy because next week we have earnings season really like getting full steam next week with Tesla earnings. We also have GDP and PCE data coming out next week too. So I think that's kind of the big one. Separate day trading stream would be fun. Yeah, because again, my channel mostly is economic data, right? So like, if you look at my biggest streams here, you know, most of my biggest streams are economy stuff, you know. So like, if we look at my channel here, like, we get great views, right? But like, streams like today is pretty light. But again, I think it's just because I've been streaming for hours and hours at this point in time, you know. So like, day traders don't have that stream to join. But if we look at, like, you know, again, the last 48 hours, we got 37,000 views on the stream, you know. And if you look at, like, past live streams, my biggest stream is Powell, PPI inflation, like CPI inflation, FOMC stuff, Powell speaking. Like, we get a lot of views, but, like, every now and then, like, my regular streams will be really light like this. I think the way to fix it is to like, have a dedicated day trading stream. Some days, it depends on what's going on. If we have like the JOLTS report going live at 10 a.m., then we're probably not going to do a dedicated day trading stream. We're just going to have to figure out the system that we build here with stuff like that. You know, like manufacturing PMI and services PMI, some of those days we're not going to do a day trading stream. But outside of that, days when we don't really have economic reports, those are probably the days to do it, right? Right, can news ever get in the way? Sometimes it can. I think, like I said, I think manufacturing and services PMI comes out after 10 or after 9:30. I think the JOLTS report are the big two that come out like after the opening bell. But outside of those two, everything else is basically pre-bell. Yeah, Netflix earnings tomorrow as well. That'll be big too. aren't looking forward to the open, why not? Here's the opening bell. We got 4 minutes, chat. Let's see what we get. Yeah, I mean, the first 15 minutes after the bell can be kind of sketchy. It depends, though. I'm more of like, I don't trade the first 3 or 4 minutes after the open, but after that, I'll trade it. You know, but again, it varies, right? Like, it depends. Some days are better than others, or worse than others in that way. Yeah, we'll see if this opens crazy. I'm gonna shrink this and see what everything else does here. Put the Intel up. All right, we got the opening bell coming soon. I'm gonna put Intel, SPY, Microsoft in the queue up. I'll put Nvda up here actually. So here's Nvda. We'll make the day trading screen bigger so people can actually see it. Oh wait, we already have Nvda up. So we got Nvda, Intel, the queue. What else? Apple. Yeah, Apple's down a lot as well. It's down to 229s. Look at us starting to break down here too. All right, here we go. Yeah, I wouldn't day trade as soon as it opens. I think that's risky. But do what you want to do. But I think that's sketchy. I would be careful doing that. All right, so here's the opening bell in 1 minute, chat. We got 1 minute to the opening bell. So we've got a little bounce back. Again, we got about 30 seconds left until the market opens. 30 seconds left. So we are starting to flush down, break down a little bit here. All right, here's the opening bell, 10 seconds. Intel actually breaking highs leading into the open. Everything's kind of cracking lows though. Look at this low break right before the opening bell here. Y'all be careful. Ding, ding, ding. There's the opening bell here. Hey, sorry guys, Carol showed up right at 9:30. Alright guys, so we got this breakdown right before the opening bell and then a bounce back right at the opening bell. I want to look at GameStop also here though. See what Nike does. Nike's bounced back a little bit here. GameStop back up some. This looks weak though, to be honest, for me. But we also have some extension on the downside here. I'm gonna let the opening bell play out though. I'm not gonna buy. GameStop spiking up and going green on the day at $29 now. AMC spiking up as well. Intel just broke highs again. we bought snow up as well. I don't know if I like this. Again, I gotta let the opening bell play out some first. Yeah, Carol has the worst timing ever. Bro, right at 9:30 she shows up, dude. Right at 9:30 she shows up. Worst timing of all time ever in the world. Look at Intel though. Intel spike it up. Look, there's the breakdown I thought we would get. Again, it's a little bit too early for me though. I gotta let the opening bell play. Intel's treating me good. GameStop's treating me good today. Pepsi. Almost back green on the day. That's nice. PayPal slightly red. T-Bill's good. We're back green on T-Bill. Uber's down some, but that's alright. I think we took some profit on that one yesterday. We just cracked lows again. I don't like this down wick. Ugh, dude, I clicked buy. And, alright, we're out. So we basically lost nothing there. It could have been a lot worse. Again, I gotta let that opening volatility play out some first here. I don't want to risk that. The S&P is actually up, which is interesting. So the S&P is actually moving up. Apple up a lot too. Equities are doing better though. They're starting to look good. Intel's still pumping higher at 97 or at 37s. Apple is too. Yeah, I mean, Shiv. Just to help you out, Shiv, loser is spelled L-O-S-E-R, brother. L-O-S-E-R. It's not looser. Loose would signify something is loose, not lose. Lose is spelled L-O-S-E. If you're going to call me a loser, you might want to spell it right, bro. Cheers to you, sir. You're welcome. Yeah, Intel flying up right now. Flying up. Looks good. Again, you got the dumbest people in the world arguing about markets. Again, they you know, it's all good. Anyways, market's starting to come back down here. We'll see if it holds. My equities portfolio is basically flat on the day. We were down like $100 prior. Yeah, Apple turning up. A lot of bullish action here, chat. Huh. I see him. IWM. I've heard a couple people mention that. What is this? IWM. Oh, it's the Russell ETF. Yeah, I mean, small caps are going to move with volatility in large caps. That's pretty standard, I think, you know. Only losers spell a loser. Yeah. I mean, it's a really good look at, like, the Dunning-Kruger and what it all means. Like, you know, the dumbest people think they know the most, and you know, they're the ones that are the loudest in the chat, calling other people names and making fun of people, and you know, they don't even know how to spell, you know, the word loser. You know, it's a really interesting look at, like, you know, people as a whole, I think. Oil stocks heating up. Yeah, where's oil? Oil's been pumping up too. Macroeconomic uncertainty is going to cause oil to run as well, though. So. Alright, so we're at the very top of the range here. I'm trying to wait and let the opening bell play out. Taiwan Semiconductors is down to 175s. You know, I did get into a couple good trades on the S&P 500 just to show you this. I'm up a little bit on it. I'll probably take the rest off there, lock it in. We're up about 80 bucks on the day. We are getting this breakdown. Part of me wants to buy this dip. We're right at the low. I'm gonna buy it. A little risky, but I think we're gonna get a bounce. There we go. We just got another bounce. We're up about 100 bucks. Oh no, we're up about $200, $155 on the day. We'll see if we get another dip here that I can buy this bounce. Fed Waller sees central bank getting closer to an interest rate cut. Yeah, for sure. I think we'll probably cut in September is my guess. Like I said, September cut makes a lot of sense, I think. All right, so here's well, I'm gonna buy this again. It's a little risky for sure buying this bottom here, but I think Apple is right at a bounce level. But it's definitely risky. We can get out roughly break even on the day if it doesn't work out. So we cracked lows. See if we fake out and retrace back up. I could add to it. I'm not going to though. There we go. All right, so we're out. We made a little bit of money on that trade. A little bit of money. Got out mostly break even. I might add it right back. All right, so we're back. See if we can pop up a little bit here. Kind of flat here. Let's see if we get just a rebound. There we go. Okay, so we're out. We made another $100 and something. A little bit late of a fill here, but we are now up 250 on this account on the day. Do you think Disney is a dinosaur stock? No, not really. I think Disney owns everything. It owns Marvel. It owns Star Wars. It owns ESPN. It owns a lot of the big brands, and it's really diversified. And so I think Disney will be fine. A lot of good bounce backs after the opening bell. GameStop specifically is up a lot. Those brands suck right now, though. Right, but I mean, I think, like, look, we could say they suck, right? But again, everything moves in waves. And so interest moves in waves, right? And the time to buy Disney is not when they're super hyped up, it's when they're low, right? And so the time to buy it is not when it's up here where Star Wars and Marvel are at the peak of its popularity. The time to buy it is when it's dipping down here so that the next time you get spikes in popularity in those things, you're there to ride it up, right? And again, I'm not saying it's going to go up. I really don't know, right? I don't know what it's going to do, right? Right now, I see GameStop and AMC spike and start to run. Yeah, so... yeah, Intel's been going up a lot. Again, I'm not really trying to buy it up here, though, to be honest. All right, so we're up about 250 on the day. Short term. I might short it now because I think Apple looks kind of weak. Although I'm getting a little bit delayed fills here for sure. There we go. Alright, so we just made another $100 or so. We're up 330 on the day. Yeah, so not too shabby so far. We caught the breakdown. We've looked at Apple and figured out what Apple is going to do. I feel like AI could replace a lot of that and take over the movie industry and replace Netflix. Nah, man. That's a silly take, I think, brother. You know, the reason it's a silly take is this. If you think that, okay, here's why. All right, especially Netflix, I would say, Tony. Tony says, I feel like AI could replace a lot of that, though, and take over the movie industry and replace Netflix and Disney and all this stuff. The reason it's a silly take is this. All right. If AI starts to be as useful as that thesis would say, the very obvious thing that's going to happen is that Netflix, Disney are going to adopt it as well, right? And so they're going to have it in their power to use as well. And that's going to actually make those companies grow more, faster, and more and faster. A good example of this is Adobe, right? And again, I had the same kind of thought process with Adobe here, right? A lot of people thought Adobe was done for because of AI basically replacing a lot of the work. But what ultimately ended up happening with Adobe is that Adobe actually is stronger than ever now. Why? Because Adobe adopted AI and started using AI for its own stuff as well, and started adding AI softwares and services that you could use AI with. And so that actually benefited Adobe more than it hurt them. And so Adobe's stronger than ever now because they used AI and they took it in quickly. The exact same thing will happen with Netflix and Disney. And if AI, and it's a big if, ever becomes useful enough to be able to produce like deep, good stories like that, if it ever happens, which is a big if. Anyways, microchips are starting to fall. Apple's starting to fall down a little bit. It's interesting though, like the whole market's mostly down, but somehow I'm pretty close to green on the day. Yeah, so we're pretty green on the day. We're up 300 and something bucks. I'm probably just going to close it down and we're going to come back tomorrow, like I said. That way tomorrow we'll have our own dedicated day trading stream. We'll try to set a couple things up for the time being right now using the same type of thing. But yeah, again, if you want to check out Apex gives you a demo. They test your skill with a demo account first. If you pass the test with the demo, they fund you the same amount. So the base one, you get 25K demo. If you can make 1,500 in profit without losing that first and following their rules, they fund you 25K with a 90% split. It comes with real-time data as well. And again, you're going to hear haters for programs like this or whatever. The reality is, if you were going to pay for real-time data in a demo account in futures yourself, it's going to cost about the same. You know, 40 bucks, 35 bucks, it's going to cost about that, right? The difference here is that if you pass this test, you get 25K in funding with a 90% split, where a demo account's just a demo account. You're not risking, you know, it's not teaching you how to trade. You're not getting funding if you pass it, all that good stuff. So this is just kind of an extra thing that you get with it. And again, you can also get the 150, 250, and 300K challenges for the same price if you use my coupon code, which is BT. Use beginner trading, will get you the max discount at all times. It'll get you the max discount. Again, they pay out millions. It's the best of both worlds. It's limited risk. Most day traders lose. That's probably the same here as well. Most day traders are going to lose here as well. The difference is that if you lose here, you're out 35 bucks. If you put up 5K and lose that, you're out 5K. It's a lot cheaper to lose here than it is to put the money up yourself. So in that regard, if you're trying to learn how to day trade, this is the best option, in my opinion. But they pay out hundreds of millions of dollars to their traders. They fund thousands of traders. Great way to learn. Again, though, they're a sponsor of mine. They pay me money, so I'm biased, of course, because they pay me money. You know, understand CFTC 4.41, hypothetical or simulated performance, have limitations, all that good stuff. If you want to check them out, use my coupon code. There's the link. Appreciate the love, guys. Thanks so much. Understand I do trade off stream. I'm not even claiming to be a good trader. You're not going to see all my trades either. So, yeah, understand all that. It's definitely overhyped, but just think of this concept. Instead of picking a movie on Netflix, you can tell AI what movie to make here in about 5 years. Right, but again, I think it's going to be longer than 5 years. I also think that the movies that they're going to produce are going to be noticeably less quality content versus what the movie studios are currently producing, you know, and I think it's going to be longer than 5 years as well, right? So that's my takeaway from there. But yeah, y'all be safe. Good luck. I love you all. Y'all have a great day. I'll see you guys tomorrow. Again, we'll see you guys later. Good luck.